What's going on, guys? Krenar here, aka Crypto Cray. In today's video, I want to discuss the financial and social revolutions that are being facilitated by cryptocurrencies, why I think these revolutions are currently happening, and how I think cryptocurrencies play a part in them. So before we get into the video, if you haven't already, please check out my previous videos. I have videos outlining the evolution of blockchain, how to value a cryptocurrency, and use cases of Bitcoin. So if you're new to cryptocurrency, I think you'll find those helpful. If you're new to the channel, I think you'll find those interesting. So please check those out if you haven't already. So getting into today's topic, the financial and social revolutions that are currently happening as a result of cryptocurrency, I want to start off with the financial revolution aspect. So when you think of cryptocurrency, I think the first one that people think of, and the main one is Bitcoin, right? As it being the first cryptocurrency, but also it being the largest cryptocurrency, right, by market cap, and so it's kind of the cryptocurrency that everyone first thinks about. And the kind of origins of Bitcoin really tie back to the global financial crisis in 2008, where we had a kind of a banking crisis due to subprime mortgages that were being loaned out, and then all of the derivatives and everything tied to those, and then the subsequent bailouts that happened, where basically banks were basically bailed out for taking bad bets, right? So it's this kind of idea of you privatize profits, but then you socialize losses. So either the creator or creators, right? So we don't know who actually created Bitcoin, but Satoshi Nakamoto, basically within that first block. So that was in 2008, and then the Bitcoin protocol was released January of 2009, and when the first block was mined, within that first block, there was this message highlighting the recent UK bank bailouts that had happened. So really, with I'm trying to drive home is that within the origins of Bitcoin was this kind of distrust of the current financial sector, right? That's kind of where all of this starts. People wanting to get back to a sound money, and a lot of the principles of Bitcoin really tied back to having a global decentralized currency, which no one could control. No one could control the supply, right? It's all governed by math. There will only be 21 million. And when you juxtapose that to the financial system at the time, right, you have all of these banks, which they basically control all of the flow of money, and they basically are the ones that are allowed to to give out the loans and everything, and they reap all of the benefits of having that banking status. But then when it comes to them making really aggressive bets, and then having to pay for those bad decisions, ultimately having to be bailed out by the taxpayers, right? And obviously this led to the ultimate rollout of quantitative easing, which saw trillions and trillions and trillions of dollars being printed, being basically inflated into the money supply. So Bitcoin was a direct attack at that, a kind of a wanting to get back to sound money, and a lot of the main people that believe in Bitcoin believe that you should own your funds. As opposed to a bank where basically you're giving up your funds for deposit, and then banks are paying you very little interest on those deposits, but then they're going out and then they're lending that money at additional interest, basically making money off of your money while your money sits in your account and makes next to nothing, right? Again, due to this quantitative easing, where all of this money was being printed to quote stabilize asset prices, but at the same time keeping interest rates really low. So then all of this money that was being printed, there wasn't all of this additional added inflation added to it, right? Which otherwise would have made the whole kind of process unsustainable. So in addition to this, the kind of this money printing status that central banks have, and this fractional reserve system that kind of just ordinary banks have, there are many other cryptocurrencies that are aiming to disrupt the kind of peer-to-peer lending networks, kind of how banks, or how companies get financing, right, to finance their own businesses, and as well, creating a banking system for the current unbanked, right? A lot of there are many places in the world that are underdeveloped, that where you have no documentation, and you have no ability to store your funds or to go and ask for a loan based on collateral that you might actually have. So a lot of these cryptocurrencies that are specializing within this financial realm, it's a kind of a direct revolution towards the current financial products and industries that we have now, which are very top-down, centralized, and benefit only the very few versus all of the other people that all of the rest of society that they should be serving. So that's the first part. The second part is this kind of societal revolution aspect that I think cryptocurrencies play a part in, and it's kind of two things that where I think these things play, where I think cryptocurrencies play into. It's one, this overall lack of trust in governments and in major institutions. So right now we see some of the lowest levels of trust in government that we've seen in the history. And it's due again to people realizing that these governments and these central banks, they don't have people's best interests at heart, and really it seems to people that they're looking out for the elite versus all of the kind of the average Joe in society. And the second thing is where we see people, even though despite all of these government statistics that say the unemployment rates are at all-time lows and all of this stuff, and there's quote more jobs than there are people to fill them, which to some people seems like it doesn't really make any sense, and I don't know how valid any of these statistics are. But I think when you speak to the average person, you see that wages have not kept up with the increase in prices, and more typically people are going to these kind of seasonal work or contract work, and that's where I think cryptocurrencies come into, where you're able to monetize some of your assets that you ordinarily wouldn't be able to monetize. So starting with the first topic of the decline in trust, we see that a good example of this is Equifax, right? Where Equifax is basically a credit bureau where they basically own all of your data, right? They own all of the data to you, all of your credit lines, all of your income, basically all of your information. And then when a lender wants to go out and then make a loan to you, they will reach out to Equifax, or there's a few various other companies that do this, and they basically aggregate all of your data and give you a credit score, and then this credit score is the determination whether or not you qualify for a loan, right? Well, what we fail to realize is that these companies, they pay very little money, basically next to nothing, to own our data, right? That's our information, and they have the ability to own that data and monetize it in a way that they store it and then they sell it to these lenders who want kind of like an aggregated credit score. But then if we look at what happened most recently with Equifax, where they were hacked, right? And then it came out after the fact that they had many warning signs that a lot of their systems were susceptible to these attacks, but then we realized that they have very little incentive to kind of fix these things, because they have a monopoly over this industry. They own all of our data, and so what if a few a million people or some people get their identity stolen? You know what I mean? They'll just offer us a year's worth of identity protection, and they'll sweep it under the rug, and no one can attack them because no one can come after them, because they're granted by the government to have this ability to own all of this data, to aggregate all of this data, and then to be able to go out and sell that, right? Versus where you could have a decentralized, distributed credit rating over using a blockchain. I think Civic is a good example that does this, where basically your data would belong to you, and then companies would have to go to you to then ask permission to ask for your data, right? So then in that way, there's no one centralized database that anyone can attack, and then if one attack proves successful, then you get millions and millions of data, versus in a decentralized manner, if this is done, attacking one person, that only gets you access to one person's information, then you'd have to do that a million times over to get the same effectiveness, versus just hacking just Equifax once, right? So we see that this is a lot more powerful. And then as well, if we think about Facebook, where Facebook was selling people's data without them users knowing. And then kind of the backlash with that, where people were saying, well, wait a minute, I don't want to give up all my data to Facebook, and I don't want them giving it to these third parties, and I don't want those people influencing what I see on Facebook and kind of manipulating my feelings, right? And this is where people started to realize that, well, when the product is free, when you're using the product and it's free, it's not really free. You are the product, right? They're monetizing you. And so that's where I think a lot of these kind of current industries and applications can be done over a blockchain, or be done in a decentralized way, where where you regain control of your data, right? Where you become the sovereign holder of your information, which I think is more and more important with this lack of trust with institutions that's growing now. And then as well, we see the kind of income inequality that's going on, where you see a lot of people have seasonal work versus 9-to-5 salary jobs, and we see the rise of Uber and Airbnb with these sharing economy models, where before, if you wanted to be a taxi driver, you would have to own, for instance in New York, you'd have to have a medallion to drive a taxi. Well, Uber comes in, they create this app which match drivers and riders, and then for a much substantially smaller fee, you can match those two, and then you can immediately start making money, right? So then in that way, that drastically lowers the barriers of entry into becoming a taxi driver and basically monetizing your car, right? It's a lot easier to, I think the average person has a car versus can afford a very expensive medallion, or kind of the ability to pay those taxes and fees within a certain city to be able to do that. And then as well with Airbnb, it was taking additional rooms within either an apartment or a house that you have, and then being able to rent those out to people that need those rooms, right? So you're able to monetize assets while you're not using them. And similarly, how we can think of monetizing kind of our hard assets, you could think of being able to monetize your digital assets that everyone has, but doesn't really think of as a way of generating kind of like passive income in a way. So if you think about web hosting, data storage, you could think of sharing unused your unused Wi-Fi bandwidth with people that don't have internet, or that don't have fast internet speeds. A lot of these cryptocurrency technologies that are coming about now are building networks where you can share these digital assets over a distributed, decentralized network in ways that we've never been able to before, right? So in the same way that Uber opened up this drive sharing economy, and Airbnb opened up this room sharing economy, I think some of these cryptocurrencies are going to open up some of these digital computational sharing economies, where everyone might have unused bandwidth, or a lot of people pay for internet, but maybe they're not constantly using it, and then you can point that and share it and have it being shared, and then in that way you earn passive income. And I think more and more as we enter into a world where work is going to be harder and harder to find, at least reliable, well-paying work, I think that people are going to increasingly look for ways to monetize assets that they currently have, and monetize means that they currently are able to do, and so I think that some of these networks are going to be able to facilitate that. So those are kind of my thoughts, how cryptocurrency is playing a part in both revolutions for financial and societal aspects. So what do you guys think? Do you guys agree? Do you think I missed anything out? Do you have anything to add? Please comment down below. If you guys like the video, please give it a thumbs up. If you guys like the channel, please subscribe. It'll help grow and bring awareness to the channel. So thanks for watching, and I'll see you guys on the next one. Peace.